see mortgages go to a 50-year term? Well, today we're going to dive straight to it and see what it looks like and see what other countries are doing. Starting off from the top, we saw UK recently propose the changes that they could see mortgage terms go to 50 years. Similar to Japan, where mortgages pass on through the generations. Now, this is a huge call because unaffordability is a huge problem in the UK, which is very similar to what we're seeing here. And we can see that Boris Johnson is really pushing this one, trying to get mortgages over the 30 years term, which will increase people's affordabilities. In Japan, they've got terms up to 100 years. Now, Jaden, I know we've seen this happen in Australia before, where we've gone from a 20-year mortgage term to a 25-year term. Now the lenders mostly are sitting at that 30-year term. We've even got some lenders that look at 35-year term. Do you think this is something that we could ever see in Australia coming to solve that unaffordability issue?
Yeah, I think we have it here in a certain form where there's some lenders right now today that'll offer a 35 or 40-year mortgage term. And we'll go through the advantages and disadvantages of that. There's a couple of customer-introduced banks. I guess the kind of scary thought is, with the average age of Australian first home buyers being closer to 40, at the moment, the average is 36. So if you're going to 50 years, you're going to be 86 before you actually pay off your loan, which is, I guess, a frightening prospect. And even the fact that if you're 36, you're getting a mortgage for 30 years, you're going to be 66 by the time you're actually going to pay it off and retiring. So I think it really needs to be sort of thought about, because also there's a couple of government schemes that are going to help. But the biggest issue I see is that you end up actually paying a lot more in interest over the life of the loan. So let's say, for instance, you've got an $800,000 mortgage, at the current, say, rates at around sort of 4%. The minimum repayments per week are $881, and the total interest is $574,000. But if you extend that out to, say, 40 years, the interest goes from $574,000 to $804,000 over the life of the loan. So you're paying almost $220,000 more in interest. Your repayments going down lower. And I guess the longer loan term means that potentially you can borrow more, because again, if you're going to go all the way to, 50 years, the repayments go from $770 to $712. So they're $60 a week less. So it means effectively, because you're borrowing over sort of that 50-year term, you can potentially borrow more if you want, or the repayments are a bit lower. But the downside is definitely that you're potentially going to have to pay a lot more in interest. And I think that's something that people are sort of overlooking. So even with the schemes in Australia, with some of the ones out there, Ubank's one of the banks that actually can go to 35 years. RACQ Bank, we're advertising this 40-year loan term a couple of years back. From what we've seen, there's not been a massive take up because of the fact that, interest rates have obviously been very low historically. That's obviously changing now with some of the changes. But the fact is, you're going to end up potentially paying a lot more in interest costs, and it's going to potentially chip out of your equity. And the fact that you might not even be working by the time that this ends. So it comes up some issues with retirement.
Definitely. And I think we got to also cast our minds back. Probably only in the last 5 years, it's become more and more common to have a principal and interest setup. Back when we started in the industry, it was very common to be setting up your loan as an interest-only term. So back then, people weren't actually paying down their loans. They were waiting for the equity increases in their property to come through and see them when they retire or want to downsize or upgrade, see that difference between their loan and the equity as their real windfall here. So that might be something else that the 50-year term gives a lot of people, is that real affordability piece in being able to get that $1 million property, which maybe they weren't able to achieve back in the day, and then in the future rely on those equity releases. I think this is something that will definitely increase the property market, as we've seen in the past with a lot of these changes to incentives and schemes and even terms will have a knock-on effect and potentially unintended consequences. So something to look out for. One thing I did see that was really interesting as well, if we look at the UK government's website, a lot of their schemes have a similar look and feel, and maybe even a taste to what we see in Australia. So they've got their Help to Buy equity loan scheme. Well, that doesn't sound too dissimilar to the Labor government's Help to Buy scheme. I looked at some of the details and it's very similar to what Labor's doing. They've talked about stamp duty relief in the UK. We've seen that with the New South Wales government recently and what they're doing, and even a guarantee scheme which represents a very similar scheme that we have here called the First Home Guarantee Scheme. So given that we see so much similarities in the UK market, I don't think it's something that we can really put past us that a 50-year term might not be too far off the cards, especially if unaffordability continues to be an issue for a lot of home buyers out there.
Yeah, and I guess the government's probably trying to look for other strings to push around sort of affordability. Even with talk of higher interest rates, it means that potential landlords who own investment properties are going to pass on those higher interest rates onto the tenants and the people renting. So it's one of those ones where, I guess, in an attempt to potentially tackle those costs of living and that affordability, extending out the loan term means that your sort of repayments per week potentially go down. So instead of being on an $800,000 loan over 25 years, instead of paying $974, if you did a 40-year loan term, it goes to $770 with the same interest rate. So an extra sort of $200 a week in cash flow that you wouldn't have otherwise had by having sort of a longer loan term. Obviously, the downside is you're paying a lot more in interest. So and there's no tax benefits of a home that you're sort of living in. So you need to sort of take that into consideration. You need to sort of run the numbers and see if it does make sense in your situation. People might sort of use this to get in the market and then realize after a couple of years. And there was a report with the UK and even some of those 40-year loan terms that really the intention, even the ones in Australia, is that whilst you might be signing up initially for a 40-year loan term, you ideally pay it off a lot quicker, because otherwise, as you get sort of older, your income, I guess once you approach retirement, like your income's obviously not going to be the same as when you're working full time.
Definitely. And I think the other thing to keep in mind here is, look, the longer term means that people can borrow more money. More money, we know, ease of credit increases property values. But one thing we see, which is another flip side, which is very common with the current 30-year terms, is people that have had their loans for 5 years, they've got 25 years to run, they come back to us, they do renovations, they want to do consolidation of credit cards, and then they want to reset their term back out to that 30 years. So a lot of times we do see people that have the best intentions, but continue to extend their term out so that they can get that lower repayment, especially while they've got a young family or paying for high school fees and whatnot, things like that. So I think it's always going to come down to the borrower and having discipline to pay down that loan term faster. And if possible, if they do release a 50-year term, you'll still have the opportunity to choose the term you want. So you don't have to go for that high term. If it is something that eventuates, you can always keep a lower term and pay things down faster.
Yeah, and I think the other thing to consider too is that we covered a stat the other day from CoreLogic where the average number of years that an Australian holds a property is about 9 years. So most people aren't going to be holding their property and having their mortgage for 30, 40, 50 years. In Australia anyway, like most people hold it for about 9 years. And like Nathan said, they might sort of upgrade, you might have kids, your life situation changes, you might move away from your city, you might need to sell it to pull the equity out. So I think this is probably one of those things that, potentially could cost you more interest in the short term, could be good because it might help you, make that home a bit more affordable, help with your cash flow in the short term. But definitely you want to approach it with caution. You want to realize that whilst you might be getting that sort of lower repayment and you feel better in the short term, it's going to cost you a lot more over the long term. You need to sort of weigh up the pros and the cons around that.
Definitely something to think about. Now, guys, please leave a comment below. We'd love to know what you'd like us to talk about next. Here at Hunter Galloway, we're actually mortgage brokers based in Brisbane, but we deal with people Australia-wide. So if you're living in Perth, you're in Adelaide, you're in Sydney, you're in Melbourne, anywhere in Australia, we can help. We get home loans approved. So if you're looking for assistance, simply hit us up at huntergalloway.com.au or call us on 1300 088 065, and we'll see you next time.